No. We're not done just yet. We got one more big day coming tomorrow. I know it's been a busy week. Election, FOMC today. We got non-farm payrolls, though, right around the corner. Got a bunch of great setups we're tracking for tomorrow. It's Thursday evening, after all. It is November the 5th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow, not just any Friday, non-farm Payroll Friday. I got a great video in store for you guys tonight. Charts are all prepped up in the background. So much to talk about in tonight's video. Got a bunch of great setups as we prepare for tomorrow's non-farm Friday session. S&P, oil, gold is ready. Before we jump in, though, and put the plan together for tomorrow's final day of this crazy week, I just want to make sure to remind you, if you've done so already, make sure you subscribe to our YouTube channel. That way you never miss all the good stuff we publish every evening on this video newsletter. And don't forget, if you guys have any questions, drop those questions in the comment section below for me. I'll get them answered as soon as possible here tonight. And as always, I really appreciate you tuning in every evening. If you enjoy this video as much as I enjoy making it for you, I always appreciate you guys hitting that thumbs up here on the nightly newsletter. So again, please make sure you subscribe. That way you get notified every time I publish this nightly newsletter. Drop those questions in the comment section below and hit that thumbs up if you guys enjoy the video on this presentation here tonight. But enough of the introduction. Time is ticking. I'm a little bit behind schedule. Let's take a look at the charts here as we go into tonight's video. Boy, oh boy, lot to cover here for tomorrow. Big news coming at us tomorrow. How about the gold here? Gold is a classic melt-up market. Beautiful run higher on the gold. Not that many deep pullbacks, though. Usually there are two key scenarios we want to look for after a melt-up market. We'll talk about those two most important setups we're watching for tomorrow. We're going to dig into that gold here in a lot more detail. Over on the oil. Oil is call it a spike in channel, call it a spike in range. It's basically a range-bound market, which means we're looking to get long below the lows of this trading range. Now, momentum is going to be a factor on oil tomorrow with that pendulum swing coming down overhead. So, we're looking for one specific type of entry pattern down around those $38 and change area. And we'll talk about more about the entry patterns, the best work tomorrow on the oil market. And then over on the E-mini. E-mini is very similar to the oil tonight. Bullish market into a triangle. Triangles are probably the easiest type of range-bound markets to trade. We'll talk about the triangle. We'll talk about the two key ways to trade a triangle range: failures and breakouts, right? Failures and breakouts. We'll talk about those key setups we're tracking for tomorrow. So S&P is ready, oil is ready, gold is ready. Let's make sure you guys know the schedule for tomorrow before we jump into these charts here. Check in the economic calendar, courtesy of Econo Day. Tomorrow, of course, is the end of what might be the busiest week ever, right? Well, at least of the year this year, right? Very, very busy week. Election, of course, was on Tuesday. Well, I guess the election is still going on right now from what the news headlines say, right? We saw, of course, the FOMC today, and tomorrow is just to put a cherry on top, election on Tuesday, Thursday FOMC. Tomorrow is all about that non-farm payrolls, the employment report. Possibly now, It's not often that the non-farm pay report is the third biggest news event of the week. In normal conditions, when there isn't a presidential election going on, that employment number is the most widely watched economic indicator or economic news report that we have as traders. They're expecting about 600,000 new jobs to be added tomorrow, right? That's, of course, I believe the consensus from like 450 to 900, but 600,000 is kind of the magic number they're talking about adding into the U.S. economy tomorrow. Why that is important, why it's important to us is because where we get the biggest moves tomorrow is when they miss expectations. If they come out right within, 500 to 700, that's not going to be a big deal. But if the number comes out, 400, 350, or, 750, 800, that's where you start seeing markets really start to rev their engines. So 600,000 is what they're expecting. That's kind of the consensus number as far as the number of new jobs that are added. It's a pretty big number, and we'll see if they can hit that number tomorrow. If they can't hit that number tomorrow, again, Think about, below 400, right? Over 800, right? Those wide margins, that's where markets will start to snap and will start to be really active right after that employment number comes out tomorrow morning. Now, remember, I'm not trading the actual report, right? We're not that crazy. I'm a little bit crazy every once in a while, but I'm not that crazy. It is very unpredictable around that news report tomorrow morning. So what I always do is I always bracket it, right? I always bracket about 20 minutes before and about 10 minutes after, right? So just after 8 o'clock, I'm sitting on hands. About 8:40, 8:45-ish, right? We'll start getting after it tomorrow morning in our trade room. Now, don't forget, tomorrow is also a Friday, and usually the employment number on Friday will really be now, again, it's been a pretty busy week this week. The markets might be a little bit tired, right, after the election and the FOMC. All kidding aside, though, usually the non-farm payroll number is going to result in a lot of action early in the session. A lot of volume, usually lots of volatility. We'll see. Again, tomorrow might be a bit of I wouldn't say disappointment, but we may have squeezed a lot of the juice out of this market, right, because the last couple days here. So we'll see. But generally speaking, in typical conditions, the morning session, that kind of 8 o'clock to 11:15 is usually where you want to focus on your trading on a Friday morning, especially on a non-farm Friday. Now, sometimes we get lucky and we get these big runs in the afternoon. So don't be afraid to leave a little piece on top, right, and let it run in the afternoon. But just be careful about putting on more risk in the afternoon. People start doing weird things on a Friday, especially after a week we've had this week. So again, got to have a good reason tomorrow to be trading after 11:15, 11 o'clock. That employment number is our big number. And don't forget, 20 minutes before, 10 minutes after, the big number we're looking for tomorrow is, can you get it below 400? Can we get above 750, 800? That's where we're going to start to see the most bang for the buck, literally bang for the buck tomorrow morning. Now, speaking of tomorrow morning, don't forget, every morning, 8 o'clock Eastern time, we'll be doing this all together tonight. I'm going to prep the charts up. We'll put the plan together for tomorrow. We'll plan our trades tonight, and we'll trade our plan together tomorrow in our trade room. What I'll do is I'll put a link for you guys to get registered for tomorrow morning's trading session every morning, Monday through Friday, 8 o'clock Eastern time. Grab the link in the description of this YouTube video. Get registered and come out and join us every morning in our trade room as a member here at School of Trade. So grab the link in the description. Be ready for tomorrow. And again, careful around that news, right? It oftentimes will get pretty violent. So now we know what to expect here for tomorrow. Again, early in, early out, a smaller window of opportunity on the charts here tomorrow just because of that Friday trading session. We got the gold, we got the oil, and we got the Emini S&P here. Melt up market on gold, range bound market on crude oil, range bound market on the S&P. Let's grab the S&P first here, and let's kick this video into high gear here tonight. Now, first of all, what's the key takeaway on this S&P? The key takeaway right now is we are a bull market, right? Big, strong bull run up. The sellers had their chance to grab control. They never did. And we're pretty much going sideways into a range, right? It might be a rectangle on here somewhere, but it looks like a triangle to me. The most important part of a triangle is to focus on the edges, right? Focus on the edges. The edges of the triangle are where you're going to find everybody waiting, right? Stay out of the middle. Focus on the edges. So think of this as it's a bull market into a range. So what do we do in a bull market into a range? If you recall from last night's newsletter, right, there are really kind of two types of patterns you're looking for when the market's bullish into a range. You're looking for, first of all, failure patterns, right, below the range. And again, on a triangle, you really want to focus on getting underneath some of these edges. So failure patterns, basically seller failure patterns, we call them 2-try failures in our trade room, right? Seller failures below the range, or bull breakouts, such as the 1, 2, 3 breakout pattern above the range, right? So it's basically pretty simple. It's a range market. I'm either looking for failures, right? Either looking for failures below the range, right? Looking at the price to go down, get bears caught, and buy into failures, or we look for those breakout patterns, 1, 2, 3, right? Breakout patterns. I want to avoid the middle. right? Stay out of the middle. The middle is the balance area. And there's one more kind of clue on this chart. You might notice it up there. It's a spike in channel. Pretty good looking spike in channel. I'll definitely give him that. Very good looking spike in channel. You notice great rotation. Rotation really looks good on this spike in channel. Now, why is a spike in channel, why is that an important pattern? Because spike in channels tell us look for a deep, deep pullback to the base of that channel. So you'll notice that spike in channel pattern lines up right along with, right in that battle zone of the triangle pattern or the range that we have on this chart. So whether you want to call it a bullish spike in channel or you want to call it a bullish range, I would call it a bullish range with a little taste of a spike in channel on here. So again, how do we trade a market like this? I want to stay out of the no trade zone, right? Stay out of this area right in the middle and really try to get this market to go down and buy it back up or give us some evidence, right, of a breakout going higher. My favorite way to trade these markets is I always like to wait for that pullback off the high. Again, when it comes to a triangle, focus on the edges, right? Focus on the edges. Think about the major turning points of that triangle and focus on those. That's where the best entries are going to come on a triangle with a bull market bias to it. I'm going to wait for that pullback. I'd like to see a nice strong pullback. Then I'm hoping we'll get some bears to come in and try to get short off the moving average. If they can get short off the EMA, I can now place my order to buy right into those stop losses using what I call a 2-try failure pattern. Now, a lot of times these failure patterns will come right back up. They'll pull back to the moving average and they'll give you one more shot to it. I call these failure into pullback combinations. Failure, right? The basically seller failure pattern into a pullback combination. Now, at the same time, if the market tries to go higher here, there are 2 breakout patterns I'm looking for here tomorrow. The first breakout pattern is called a 1, 2, 3 breakout. Now, the key to this one is you want to see a relatively strong move up. It doesn't mean that strong, but we have to hold the pullback and jump off the moving average. If I can get this market to 1, new higher high, 2, pull back to the moving average, and 3, jump off the moving average. The most important part of this breakout pattern is the strength of that move off the EMA. Once I see the jump off the moving average, now I can mark up my high, I can mark up my low, find that new hidden channel, and I can buy the low. I always say the first test is always the best test, right? The first test of that new hidden channel is always the best test. My second type of breakout pattern, which we talked about this a lot last night, is called a 2-try trap or a 2-try breakout. We look for a very strong move higher. Now this one, we've got to see a real strong move on it. Then what you want to see is a shallow pullback, a higher high, and a trap low. That's the next potential setup we're looking for, right, for a breakout pattern. Now, where would these buyers be trying to go? I got that 41 even level above, right, 35.41. But I have a feeling, though, if these buyers really get revving their engines, there's a big measured move up there, 35.73 half, right? I believe that's that new all-time high, right? So that's probably where those buyers are hunting for if they can get this thing to really jump here tomorrow morning, 35.65, 35.73 half area. That's that measured move, right, off of this first blast higher, right? That's where I get that number from, off that first leg, right? Anytime we see a strong move like this, that leg can be used as a measuring leg, and that's a pretty juicy target for us here tomorrow. So again, 2 basic types of patterns here in a range market. The one I really hope I get is a seller failure into a bullish pullback combination off of that low, right? Seller failure into a bullish pullback combination, or one of those 1, 2, 3 breakout patterns, right? Find your hidden channel, buy the low, or that strong jump up, that shallow pullback, that higher high, and that trap right below that low. Both of those breakout patterns are really, really reliable. Just make sure you wait patiently for them, because we don't want to try to predict those breakouts. Wait for proof of the breakout with the right entry pattern. And as I always remind you guys, don't forget, breakout patterns, failure patterns, all my favorite entry patterns, I cover all of them in our free trading course here at School of Trade. If you're serious about your trading career, if you're not with me tomorrow in the trade room, because obviously we'll do it together tomorrow in the trade room, I'll put a link up here for you guys in the upper right-hand corner. Pause pause the video, grab that link, and make sure you get registered for our free trading course, because in that free course, you'll learn all my failure patterns, my pullback combinations, my breakout patterns, and a whole lot more, right? I show a lot of examples of how we apply those setups on our favorite markets as well. So grab the free course. That way, the next time we work together, right, in next week's newsletter, you'll be right up to date with my favorite entry patterns, and you know exactly what I'm talking about when I say failure into pullback or 1, 2, 3 breakout right on the range here. Now, the one thing we haven't talked about yet is how do we sell this market right now? Is it a bull market? Yes, which means I'm going to be very careful being a seller. I definitely don't think I'm in a position right now to try to get short off the high, just because of this spike in channel. You know, this thing may end up really channeling here more. So trying to sell off the high, probably not yet. Probably not yet. I could consider selling off the high, right, if we went sideways here for a while. If the market was to go sideways overnight, I can then start to look for, you know, if we start going sideways overnight, I can start looking for what we call a crown reversal, which would be a push up, 1 try for the bulls, pull back, 2 try for the bulls, and a trap high right above that high, right? It's called a crown reversal pattern. Buyers try it once, buyers try it twice, and we're looking for that trap off of that high. Be careful though, because again, you're going to want to make sure this thing goes sideways here. That's going to confirm that range acts as a magnet, because ranges are magnets, right? They're balanced markets. So the magnet will draw it back in, but then make sure you wait for those 1, 2, get that trap high, right, and hit that short key, right, on the way back down again. The more reliable, right, one of the patterns I always look for in our trade room is called a 1, 2, 3 reversal pattern. Right now, we're very bullish. So for me to want to sell short, I'm going to have to wait for a relatively strong move down. Not that strong, but relatively strong move down, right? Take out some of these lows. And then the sellers, they're going to have to prove it to us. They're going to have to prove to us they can hold that pullback off of that trend line or off the moving average. And I can then grab that low, I can grab that high, and I can look for my short off the high. And as I always remind you guys, the first test is always the best test. Now, where's our target on this? Well, the 52 3/4 is an easy magnet to go after, but make no mistake about it though, chances are they're hunting for that low a day. That 34.28 1/4, that is, chances are that's where these bears are going to end up if we can get that reversal here. So keep in mind on that one, right? 1, 2, 3 breakdown. I'm not trying to sell that first pullback, right? That first pullback is not reliable. It's probably a 40, 35, 40% trade. I want the next one, right? That's the 70, 80% trade. That's the one I want. I would always wait patiently for higher probability setups, especially when the market is bullish and I'm trying to get short on it. So don't force the breakouts. Don't force the reversals. And remember, tomorrow morning, 8:30 is that big news report. Get there early. Don't miss, right? Don't hit the snooze button too many times tomorrow morning, because I know it's been a long week. I know we've been kind of losing sleep this week a little bit with the election ongoing here right now, but don't miss tomorrow morning, 8 o'clock Eastern time in our trade room. Don't forget, all the links you guys need are in the description of that YouTube video. Grab those links and come out and join us tomorrow morning at the opening bell. S&P looks beautiful for tomorrow. Pretty easy plan. Triangles, like I said earlier, are some of my favorites, right, on any market for that matter. How about some crude oil? Let's keep going. Now, oil is definitely it's not the prettiest thing in the world. It's kind of a chart only a mother could love, as I always say, right? It's not the prettiest thing in the world here, but you can definitely tell the bulls have a little bit of an edge, right? There's a little bit of a bullish market here right now. What's the key takeaway here? It's a bullish market into a trading range, right? Bull market into a trading range. Now, remember, and without sounding like a broken record here, if we have a bull market that goes into a range like this, right? What's the key here? What's the secret? What are the best patterns? First of all, you want to buy underneath the range at support, right? Remember, we're bullish in this example. So you want to find support levels below the range. You want to wait for that pull back to support. Wait for those bears to come in. Try to get short, right? They almost always do. And then you can buy right into their stop losses. It's called a 2-try failure pattern, right? In the sense of 1 try for the bears, 2 tries for the bears, right? You're buying right into those stop losses because the range is a magnet, right? So use the range as a magnet. Now, the 2 breakout patterns, as you recall, the 2 breakout patterns are The first one is a 1, 2, 3 breakout. This one, the name says itself, right? The name says it all. 1, 2, 3 breakout pattern. Remember, strong move up, pull back to the moving average. The most important part of the 1, 2, 3 breakout is that jump off the moving average. I'm going to mark up that high. I'm going to mark up that low, and I can buy the low of that hidden channel. The second breakout pattern, if we kind of extend this out a little bit further here, the second breakout pattern is called that 2-try breakout. Right now, this one, you really got to see the rocket boosters right on that first run. It's going to be a very strong run higher. Then at that point now, shallow pullback, higher high in price. What happens is the strong move gives the bulls control. The shallow pullback drives the bulls crazy because they want to buy a nice low pullback. They don't get it. The higher high creates some FOMO. And the reason why this pattern works so well, I really should call it the 2-try FOMO pattern, because what happens is the next time it pulls back, those buyers are not going to miss that entry. Right? Strong move up, shallow pullback, right? Shallow pullback, and buyers don't get their entry. The higher high creates the FOMO, right? The fear of missing out. And the next time it traps low, bingo, hit it. Very strong, very reliable. We call it 2-try, right? Breakout pattern, because bears try once, right? Bears try twice. There you have it, right? In a bull market, my 3 favorite entry patterns, right? The king of the failure pattern, of course, being at support levels below the range, or the 1, 2, 3 breakout, right, or the 2-try breakout pattern. Now, go back to our chart now. You can see there's my bull market, right? Here's the trading range. And you can see here, we're looking for support levels now below the trading range. So where are support levels below the range? Well, first of all, there's my range. You'll notice you can almost look at this like an expanding triangle, right? That is a great support level, right? Great support level there. So that's one spot. Another spot is you can measure the amount of the move above the range, project that down below the range. That is a great spot. You'll notice it's right on top of each other, right? 3806, 3817. Great spot to find support to combine with a failure pattern. Now, you probably could go out, right, and kind of adjust this thing down if you wanted to, right? Put this like down there, right? That would make sense too. It doesn't fit as well doing it that way, right? I don't think that's the way most people will draw it right now, but that could be done as well. And so we're trying to buy at support here. Now, there's one little wrinkle though. There's one little wrinkle in this plan, and we've talked about this quite a bit here this week, and it has to do with the fact that we are rolling over off the high, right? Now, remember, good example here. These are 2 very different scenarios right here, right? One, I go up into a range, I find a support level, and I buy at a support level, right, below that range, right? It's a 2-try failure pattern. The second scenario is we go up, same basic idea now, but now before we go lower, we jump up. And now we rotate down off the highs. What's the difference? The difference is, right, we have a lot of momentum this time around for those bears. This is a little bit of an advanced technique here, but I'll tell you right now, when you learn to kind of pick up on these little clues, right, I call this rotation off the high. And it basically just means the momentum builds so strong that now I have to be careful down here, right? Because now as this market pulls back, I have to expect bears are not going to be as much of a pushover, right? I'm not going to be able to get as aggressive as I would on that first example on the left-hand side, right? I'm going to have to wait for 1 try for the bears, 2 try for the bears, and then buy it back up. I like to find a trend line to get long off, because of course I'm always going to buy at support. But the reality is it's called a nested, we call it a nested, right, failure pattern. And the reason why we call it a nested is because it's actually 2, right? It's actually 2 inside 1, right? 1 and 2, as opposed to just 1, right, on the left-hand side. So that's the biggest kind of wrinkle, right, or variable that we have going on right now. The key takeaway is still the same. It's still a bull market into a trading range. But again, as we roll off of these highs, this is not going to feel very bullish. It's going to feel very bearish. And to make sure I don't get run over, what I'll do is I'll look for those bears to come down. I'll look for those bears to try, right? Let them try once. Let them try twice. Again, look for that trend line, right? Off of that low, once, twice. Now, where it stops. stops are right above those highs, right? Remember, the range acts as a magnet. So we wait for the bears to try once. Again, they get all that momentum, right? Give them the benefit of the doubt. Let them try a couple times. And then once we see, right, once this thing snaps higher, bingo. Now we're buying off the trend line. Strong signal candle closing above the moving average. We're buying into stop losses. There's a bunch of different ways you can enter into that trade. Another variation of this pattern, it will look like this. Sometimes it'll snap up and go right back up like this. If that happens, right, it's not the same, is it? Now look for a trap. Okay, wait patiently now, look for a trap. So you can see the differences there, right? One example, you'll go down, the market will kind of roll over, a lazy rolling over, right? You find that trend line and you're buying off the low, right? Another variation of that would be it kind of snaps up, little shallow pullback, goes higher, wait for that trap. You're still waiting for the same two tries, right? You're still doing the same thing. You're still giving the bears the benefit of the doubt. It's just in this second example, you don't want to draw the trend line up like this, because then you're buying right inside that range. You want to buy right below that low or buy as far outside of that range as you can. So a nested failure pattern if we get that pullback. Now, we can solve that problem. We can solve the momentum problem if we start going sideways here. So if we get, well, maybe not lucky, but if we get the market kind of sitting here sideways for a while, then we make our move lower, there's not as much momentum as a problem there. Now I can actually look for those seller failure into bullish pullback combinations as we try to rotate back to the other side of the range. And don't forget the pendulum swing, right? So pendulum swing makes for an excellent target on the other side of that, right, of that chart. So again, we're focusing on failure patterns down here, either going to be nested failures, right? Or if they go sideways here for a while, just simply two try failure patterns, right? Let go down, get that support level again, right? Make sure we're finding support. We're buying into stop losses on the pullback, right? Failure into pullback combination. And again, guys, these failure patterns are really, really common. I do a lot of work with those in our free trading course. I would definitely recommend grab that free course linked up in the upper right-hand corner. Again, a lot of ranges these days, right? We're seeing a lot of range. In fact, range-bound markets are more common this year than the last 5 years. So we definitely do want to make sure we're ready for trading these ranges. Now, of course, at the same time here, we already kind of know how the breakout works, right? We know the breakouts by now. We know I can easily buy this market, but I've got to worry about these tops up here, right? So trying to get long as the market goes higher here, well, look, didn't work there, right? Didn't work there. It's a gamble, right? Trying to buy that first pullback. So we look for the 1, 2, 3 breakout pattern, right? Strong move up. That's the first clue. Pull back to the moving average. Now, can they hold it, right? Can they hold it? If they can hold it, with that 1, 2, and then 3 jump, mark up that high, mark up that low, and of course we're buying. First test is the best test off the low of that hidden channel, right? A lot of this is review. We've talked about these breakout patterns throughout the week here this week. Now, where do we think the buyers want to go on this? Yeah, round number. Now, if they can get through that round number tomorrow, get ready because there's a big open space up to 41. We literally go from 40 up to 41. There's virtually nothing in between there. And it's all coming back from that big crash we had back in the pandemic beginning earlier this year. So again, a 1, 2, 3 breakout pattern running higher. Don't get too aggressive trying to buy that first pullback. Wait for the channel. And the first test is the best test. Or it's that strong run up. Remember, that's the most important part about your 2 try breakout pattern. Strong run up, shallow pullback, higher high, right? Set the bait and then pick their pocket on that trap low. I love a 2 try breakout. Again, it should be better called the FOMO breakout because it kind of ropes people in and hits them at those lows. So watch out for those breakout patterns, right, as well. So now we get a pretty good plan as far as what if the market goes up, right? What if it goes down? Just remember, if it goes sideways here, just sit on hands, right? Sit on hands, stay out of the middle. The middle, right? The messy middle is not where you want to be trading. As I always say in the trade room, right? The middle of the range is where good trades go to die. Now, how do we get short in this market right now? What's the short seller's pattern here? Well, we can get short if we can get a crown reversal off of these highs. If I get back to those highs, I can look for that 1, I can look for that 2, and I can find that trap and grab that crown reversal. That is a valid option right now because of this trading range. At the same time, you may recall there's a measured move up there from last night's newsletter, just above that high too. So I wouldn't mind that. Just remember though, if you're on one contract, if you're kind of just getting started, put it this way, if you haven't proven to yourself that you can get a high winning percentage on with trend trades, I would stay away from counter trend trades. That makes sense, right? So, prove it to yourself. If you can be disciplined, if you've got the again, the patience you need to do well in trend following, because trend following is so much easier than counter trend trades. It's more difficult to pick up on the nuances of a reversal than it is to just read momentum and trade in that direction, right? Like for example, on gold today, right? Don't try to pick tops in bull markets. Wait for pullbacks, wait for deep pullbacks, right? And look for sellers trying to go the opposite direction and pick their pocket. Right, so bottom line is, I don't want to get too far ahead of myself, but just remember, counter trend trades should make up a very small percentage of the number of trades you take every week, every month. Right, they should not be a major percentage. Right, one of the things we talk about in our trade room is you got to pick your spots, and really the only time you should be looking for counter trend trades is when you've already proven to yourself, nobody else, that you can actually succeed with trend following strategy. Right, you can actually follow your rules, stay disciplined, because remember, this is definitely not going to be as reliable, right, basically as a reversal pattern, right? So what would a breakout reversal look like? We've already got a strong move down. So if these bears, one example, if they get a strong move lower here, if this thing really starts to turn and run lower here, you're going to probably be able to grab that channel off that leg, right, and grab that low right there. Just remember though, or grab the high right there. Just remember though, it has to be a very strong move down. This leg will have to be very, very strong, right? It'll have to be like this one back here. Very, very strong there as we go. The good news is momentum's already building for the bears. So all we're going to do is just punch it, find that low, right? Find that high and get short off of that high. Again, though, good rule of thumb is you're going to want to be well below, right? That trend line there. That's where you want to think about it. What might be more realistic for tomorrow is to get a strong move down, a pullback off the moving average, and a jump off the EMA. That will definitely be a lot more of a confidence booster, because they'll basically reject the idea of buying off of that low. So 1, 2, 3 break down, mark that low, mark that high, right? Find that first test is the best test off the high of that channel. Where's my target on this? 37.26 is the low from yesterday. That is a pretty good looking target down there, right? That 37.26 area. But I'll tell you though, this oil has been really moving well over the past few days. That weekend gap, if things really get, again, remember tomorrow, the end of a really busy week, we got non-farm payrolls tomorrow. Anything is possible on a Friday, especially if we get a little bit lower volume, because we've had so much action this week, right? So on to the downside there, 35.72. Again, the most reliable first target would be at 37.26. If they keep it running though, 35.42 is a certainly viable option to pretty much go back and finish the week right where the week started. It's unlikely right now, obviously. That's a pretty big move down, but it's not that big, right? It's only about $3 down. We're at 38.50 right now, 38.60. 30, yeah, it's not that unheard of, but we do have to get some momentum going here for those bears. So now we got a pretty good plan, I think, here, right, on this oil. We know how to trade the breakdown. We know that as this market goes lower, we really got to be careful about momentum, right? We want to stay out of the middle of this range. And then again, if we get that 1, 2, 3 breakout running higher, we know $40 a barrel is an easy one. And if it really keeps going, right, that 42 will make a good objective from there. Now, 42 is a pretty big, right? It's a pretty big number to look at. But again, it's not that far away if things really start to move here in the wake of non-farm payrolls tomorrow morning. Oil, relatively easy plan. Focus on buying at support levels with failure patterns. Pull the range tomorrow or buy those bull breakouts. Let's keep going here. Last but not least here, the melt up market here today over on the gold, the yellow metal. What do we have here right now? Well, as you can see, there's really not much on the chart. It was pretty much just a straight line up. And whenever I see a market like this, that, as much as I enjoy the easy, buy the dip on the way up here, you'll notice we never really cross below the moving average. And whenever you see a day like that, there's really two scenarios you'll be prepared for tomorrow. One of them is a trading range. The other would be a really deep pullback. Think about it this way. If buyers were to come into the market tomorrow morning and say, all right, let's buy this market, they're going to look at this big move up. They're going to say, this is way too expensive. We've missed the big part of the move. They're going to wait for that nice deep pullback. So a lot of times buyers will come in and they'll say, okay, we know we're bullish, but I am not going to be buying this market way up here, right? They'll look for places to buy at support levels well off these highs. Right? So think about the market moving so far today. The only way to really attract professionals into the market is to give them a discounted price to get in at. So when we get a deep pullback like that, what's the concern though? A deep pullback means what? Failure. Well, it means momentum, really. Right? If we see a strong pullback going lower here, that now creates that momentum. Anytime we see a strong move in one direction, we expect another leg in the same direction. So the rule of thumb is, whenever I see one of these melt up markets like this, right? And I call it a melt up market because it just kind of melts, right? It wasn't a very strong runaway market. It just kind of melted its way higher here, slowly chugging along. So will buyers reject the idea of buying high? Will they buy low? I'd like to see a pullback down inside this 1933, 1927 area. I'm doing my best to find a channel on this. The channel is not lined up, you'll notice, with that battle zone, which means there is potential we see a shallow pullback. And if all we get is a shallow pullback, we'll have to look for a trap, right? Because I don't want to buy that high, right? So traps on a shallow pullback. And of course, last but not least here would be the trading range. Well, I shouldn't say that. I shouldn't say last but least. If we do the pullback that I'm looking for, I'm going to measure this leg. I'm going to measure that leg. That's how I get that measured move, right? So just so you know how I'm kind of factoring in that measured move. Right now, I don't know how far it'll pull back. I anticipate a relatively deep pullback. I hope we get it down in that 1930 area. And once we know how deep the pullback is, then we'll be able to actually factor in where that measured move is. But right now, though, all we know is the size of that leg, right? We just don't know how far it will pull back. So we'll keep an eye on that right here for tomorrow. So we know the pullback, deep pullback, and the range. Right? Now, sometimes what happens is, and this might happen tomorrow with non-farm payrolls lingering there at 8:30 tomorrow morning, a lot of times what will happen is a melt-up market, nobody wants to take profit, right? They're holding on for the long run. At the same time, though, nobody dares to sell this thing. And so since nobody's taking profit and nobody's getting short, the market kind of treads water here. Remember, buyers are not going to want to buy high. They're going to want to buy low. In this situation, what do? We find a support level below the range. We wait for that pullback, right? We wait for that seller failure, and we buy into stop losses. So that's a pretty simple, straightforward plan for tomorrow. If the market goes sideways, right, we can buy failure patterns below the range. We can also, of course, right, we can buy breakout patterns. 1, 2, 3 breakout, mark the high, mark the low, buy the low of that channel, right, by the first test off that channel. 2, try breakout, strong move up, shallow pullback, higher high in price, trap low. Both of those patterns are great, but we got to see proof of it first. Remember, we're way high up right now. We're way high up on this chart. So if they're going to try to pick this thing higher, they better show it to us if we start going sideways. Remember, that's kind of the assumption we're making on this example, right? It goes sideways. Okay, so that's the plan for a range. Pretty simple plan, right? We talked about that. Well, not that simple, but we've talked about it a number of times here already this week. All right, and don't forget, guys, if you have any questions about this stuff, you can always drop the questions in the comment section below, or just simply call me in the office. I'm more than happy to answer all your questions there as well. So now we got a pretty good idea for the range. The range, of course, is kind of a review of what we talked about already here. My biggest challenge right now is the pullback, right? The pullback is going to be the hardest one, because a lot of times what will happen is when you get, again, this is all because of that big move up. A lot of times what's going to happen is the market's going to come off these highs. It's going to feel very bearish. Okay, you don't want to let them fool you with that strong move down. Now, if they hold it and keep going, yeah, now we're in trouble for the bulls, right? Now it's a bear market. But most of the time, though, you're going to see this thing really snap off the highs, right? Once you get that, then look for the bears trying once, bears trying twice. This is exactly the scenario where a nested failure is called for. This is what nested failures were made for. These deep, deep pullbacks, right, in these melt-up markets. We've seen a couple of these on the S&P this week. Those big moves up, those really deep pullbacks, right? They look like they're reversing, but nope, not so fast. Bears try once, bears try twice, and they snap back up to retest the high. Right? Again, you're expecting a deep pullback because of the severity, or maybe not severity, but the size, right? Strength of that move today. You have to anticipate they're going to want to pull back nice and deep, right? Now, sometimes what will happen is on these deep pullbacks, it'll go like this, up and over like that. If that happens, draw that trend line, and now we'll use the same basic idea. One try for the bears, two try for the bears, but now we'll try to thread the needle and use that trend line. So this is kind of one of the side effects of a deep, deep pullback after these melt-up markets is you may see what we call a two-legged pullback, which is basically one leg and two legs down, try that trend line overhead, let the bears still try twice and buy off the other side of that trend line, find your support trend line and buy up from there. I hope that makes sense. Does it? Right? Any questions? Don't forget, drop those questions in the comment section here for me. I'll get them answered as soon as possible. So keep an eye out for those, again, nested failures. Basically, it's a nested, right, two-try failure pattern to be a buyer. My target, of course, is back to retest the high and that measured move. Right? That measured move will almost be a guarantee at that point if these buyers can hold that pullback on us. Now, remember, too, if we do see it run lower and then watch as they hold that pullback off the moving average, if they hold that pullback, we're done. Right? This market's bearish now. You'll notice I'm going to be a little more patient on the reversal on a melt-up market. And it's just because, again, you're going to see the market. Well, usually, every day's different. Tomorrow's non-farm Friday. But usually, you've got to get that deep pullback just to get buyers interested down here. So we got to let it pull back at least enough to get that. Now, if they can hold that pullback, though, and run this now with a 1, 2, 3 reversal, okay, now we're bearish. Mark up that low. Usually there's a trend line off those highs up there. Find that hidden channel. And where's my target? Yeah, back down to retest those lows from today. There's a big range, if you recall, right, from yesterday at 1900. 1900 is a nice, juicy, round number. That'd be an easy target there for those bears. So again, expecting a deep pullback or a trading range. Now, what if the market runs higher here? What if it keeps grinding higher? Nothing changes. All right, if it keeps on grinding higher, eventually it will likely go into a range, right? So we may see a range up top here. We'll use the same basic range-bound strategy. If the market runs higher, right, keeps on, a lot of times what will happen is they'll keep on kind of melting higher here. Still, wait for that deep pullback, right? Get a nice deep pullback as it comes over. Bears try once, bears try twice. We're buying into stop losses right on the way back up to retest the high. The plan doesn't change if the market keeps on grinding higher, right? It's one of the hardest parts of these melt-up markets. A lot of times buyers will come in and they'll just buy the open, right? The problem, though, is easy come, easy go. This could easily jump up. Nobody's left to keep buying it. And the market swings back down again. 1, 2, right? And buying up from there. Our targets overhead, there's a couple of really good targets overhead here. 1982 half. And 2,000, big round number. Boy, it's been since what? August? Since we saw 2,000 on the gold. Could be tomorrow, maybe. We'll see, right? Non-farm payrolls, big news. Obviously, gold got a big bump today. We'll see. It's difficult to have two back-to-back days like we saw today, right? Most of the time on a melt-up market like this, we're going sideways and we're buying with failures below it or deep, deep pullback, nested failures, and a snap back up to retest the high. If it accelerates off that pullback and runs, I know it's very tempting to want to sell that first pullback, but again, it's not a reliable entry. Mark that low, mark that high. That is a reliable entry right off that 1, 2, 3 reversal pattern. And again, targets back down at that 1900. Did I forget anything? I think we got all the bases covered to this, right? If it keeps on grinding higher, wait for the deep pullback, wait for the range, right? If we do get a deep pullback, hopefully we do get that deep pullback here. Those are usually where the money is on these melt up markets. Speaking of melt up, right? We're going to melt it all up together tomorrow morning and do it together, right? We'll put it all together here tomorrow. We're planning our trades. We'll trade that plan tomorrow morning. I really hope you'll come out and join me tomorrow morning in our trade room every morning, Monday through Friday, 8 o'clock Eastern time. I'll make it easy to get registered. I'll put all the info you guys need in the description of this YouTube video. If you're on the website right now, it's Sideways Markets. There's a big button for you right below me tonight on the video to get registered as a new member and come out and trade with us every morning in our trade room. Don't forget to call the office. If you have any questions, I'm always here to answer the call. You can use live support on the left, live support on the right. Drop those questions in the comment section if you got them, or as always, call the office. I'd be happy to talk, go over all the details, and help you get registered for tomorrow morning's trading session. As always, guys, thank you so much for tuning in tonight. What a week. What a week. Get some rest tonight. I know we're all kind of catching up on sleep from earlier on this week, right? So get some rest tonight. Don't be late tomorrow. 8 o'clock in the morning in our trade room. 8:30 is the big news. Early in, early out for Non-Farm Fridays. And as always, we'll come back and do it again next week on the next edition of our nightly newsletter. Hope you guys enjoyed it. Hope you'll share this video with a friend. I hope you subscribe to our channel. Hit that thumbs up button for me and make sure you come back and tune in again here next time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.